Hi, I'm Larry Gaines. I've been a professional trader now for over 30 years, and I've taught thousands of traders my own directional trading process that I designed for trading any type of market environment. Now, in this video, I want to share with you a big part of this directional trading process that uses multiple moving average indicators to identify price trend, measure price momentum, and to define key areas of support resistance. Now, these moving average indicators can be used as a trading tool for any type of market and any type of time frame. Now, a moving average is a widely used indicator in technical analysis that helps smooth out price action by filtering out a lot of the noise from random short-term price fluctuations. So it's a trend following type of indicator, but it's a lagging indicator because it's based on past price. Now, the two basic and commonly used moving averages are the simple moving average, which is just a simple average of a security over a defined number of time periods, and then there's the exponential moving average, which is a moving average which gives a greater weight to the more recent prices. So the most common application of a moving average are to identify trend direction, determine support resistance levels, and to measure price momentum. So key moving averages are widely followed by investors and traders, with price breaks above or below these moving averages a lot of times used as a trading signal. Moving averages on their own can be an excellent trading signal when two averages cross over. So a rising moving average indicates that a security is in an uptrend, while a declining moving average indicates that it's in a downtrend. So upward price movement is confirmed with a bullish crossover, which occurs when a short-term moving average crosses above a longer-term moving average, and a downward price momentum is confirmed with a bearish crossover, which occurs when a short-term moving average crosses below a long-term moving average. So let's look at some different trade examples, and I'll show you how that I incorporate moving averages into my trading. But first, let's take a look at the key moving averages. So the ones that I tend to follow for a daily, weekly, or monthly time frame, so kind of a swing trade all the way up to what I call macro time frame, I will look at the 15 exponential moving average, the 13 exponential moving average, the 8 exponential, the 21, and then I always want to know where the 50 simple moving average is, 100 period simple, 150, and 200. So what we're going to look at is a really great indicator where we have a 513 cross, either up or down, to indicate trend shift, either from a macro monthly basis or a weekly long term, even down to a daily kind of swing trade time frame. So let's take a look. Now, first off, let's take a look at the S&P 500. So this is the SPX, which is the S&P 500 CBOE index option, or not option, but contract. So this is a monthly, which I refer to as a macro time frame. But you can see the trend shift here. This is just a 513 cross. See this white line crossing that blue? That's the 5 exponential moving average crossing over the 13 period exponential moving average, which creates a really good signal for a potential trend shift. Now, this being a macro trend shift, so you can see this signal actually came right here. This is based on a closing price. So the actual close was on April 2020. Now, I've got this programmed in to show an arrow, based on that moving average cross. So you can see the white line crossing the blue. So this was based on a closing price of that monthly option, monthly time frame close on April monthly 2020. Now, then look what happens to the trend. It just shifts up and it explodes really rapidly and moves up, really holding that the 5 exponential moving average, and there's the 13. Now, here was a shift to the downside, which occurred on that close, and you can see it had a big move down. Now, let's take a look at some other time frames and show you how this is. I really like this for really kind of macro view of the market. Here's another example of a fantastic long-term trend that it picked off. So this was back the month of July 1994. We had that cross, and this trend just kept going and going and going. Finally ended right here in December of 2000. So you can see the 5 crossing the 13 period here, and then we had a substantial sell-off. You can see how hard it sold off, and then we finally had it reverse, and we had another uptrend start right here where the 513 crosses. That was June, July of 2003. Now, here's another one you may remember. This was back in 2008. So we had here it comes down, the 513 crosses right here. So the cross was right on the January 2008, and here you can see my signal popped up. Had a massive sell-off. Okay, sold off hard all the way down to 700, and then finally we got a reversal right here that came in October of 2009. Had a pretty good move up here, pulls back, had a sell-off right here, came down, and another reversal back up. So that's a look there on the S&P, and let's take a look at a couple others. I want to show you the NASDAQ 100 and a few others. So based on this indicator, this cross of the 513 on a monthly, again the macro, what I call that the index and NASDAQ 100. Here we had the signal entry was back in August of 2009, and we've been trending in an uptrend, macro uptrend ever since. So that was the signal, and then we've been in this uptrend ever since. So it's a great one for a macro view, and I also like to use it a lot of times. Well, all of our trading, I use it for various confirmations, but also we use it with a weekly time frame, which is excellent for a lot of the different stocks and securities and things like that. So let's take a look at a few on the weekly. So here's an example of Microsoft, and this is the weekly. I call this the long-term time frame, but you can see Microsoft had a reversal right here. This came back in April of 2000. So basically it crossed right here in April 6th of 2020. Okay, not 2000, but 2020. So you can see the cross here, and then just a beautiful uptrend, which we are still currently in. So that is a look there on Microsoft. You can see it crossed down here, had a brief push down. So even here it went from 162 down to a low of 133. Now there are other indicators that I use, but I wanted to just kind of point out this one as kind of a simple way for you to get started to look at trend shifts and trend tracking moving averages to use. But I like this a lot because it's kind of a relatively fast moving average by using the exponential 513 cross, and these are basically Fibonacci sequence numbers too. So that's a look at Microsoft. Let's look at a couple others. Now here's an example of crude oil. Now you can see it was kind of in this kind of sideways price coiling action consolidation phase right here. So you can see crude oil from April of 2020 or June of 2020 right here, it was sideways, and then it finally triggered and kicked to the upside on this 513 cross. Now what I want to show you here is how I can filter out and kind of scan out this kind of noise where it's just churning sideways, and I do this based on momentum. So I'll show you how you can apply other type of indicators to kind of help you and guide you, but this is the one indicator that's great for tracking that big trend reversal and change. But here's how I can use my other indicators, momentum, to kind of help me do this kind of phase here. So let's pull up a chart here with my momentum indicators in the 513 cross. So here is a chart on the left with just the weekly time frame, long term I refer to, with the 513 cross. So you can see here the right here where the orange arrow is, that's the 513 crossing. So what you're going to see is the area here where it's getting kind of sideways action, price kind of chopping back and forth. The way I smooth that out, and I use my momentum based indicators. So you can see down below where my pointer is, these are indicators that we use to follow momentum, which gives us potential probable direction. So cycle lower study 1, power cycle lower study 1 is a really fast momentum indicator, and 2 is a slower confirming momentum. Now this is what we call that consolidation phase or volatility compression squeeze. So it's coiling, churning sideways. So with just the 5 cross moving average, you can't really see what it's going to do because you can't see the momentum side. So what I do is I put in my momentum indicators, and you can see here cycle 1 is positive, so it's right above that 0 on the histogram, and then 2 below it's positive, confirming the probable direction on momentum for price would be for this to break out. So here we have that 513 cross. We had a 513 cross down, 513 cross up, and then the 513 cross up here. So what these indicators will do is filter out this kind of chop, and you just take the long side in this case because momentum shifted up. Now here momentum was down, so we do nothing in this kind of a time frame where it's just churning. So this gave us an entry. If you had taken this crude oil right here, this would be on November 2020, and then it's just had that beautiful straight trend up. So that's another combination of things that I use to kind of smooth out just this kind of chop. But the 513 cross is excellent for giving you that indication of trend shift. Now here's another way to use it. This is back to a monthly or macro time frame. This is copper. So look at this massive trend shift right here. This happened on copper. Was the basically the cross came on the June of 2020 right here, and then we've had that explosive move up. So that's on the monthly. Now when we break it down to the weekly, you can see it kind of more detailed. So let me put it to the weekly, and then I'll put it with my momentum indicators, and you can see how clear it is. Okay, so here's the weekly long-term chart. So you can see the uptrend started here. It actually crossed on May 2020, and then you can see on the weekly, and just a beautiful trend up. Now prior to that, we had a kind of a short-term trend down, 513 cross to the downside, and now I'll pull up my momentum indicators, and I'll show you how that really helps to define the direction for the break. So again, here's just the weekly time frame for copper on the left with just the 513 cross. But what I wanted to point out is how by adding momentum in my momentum measurement indicators, we can get a better feel for direction, which gives us the way to go on the cross. So here you can see this is also that volatility, or what we call a compression squeeze. So you can see here, right over here on the 27th, Jan 2020, we had the cross down. Now look here to this pointer. You can see that orange arrow there right here is the 513 cross on the weekly long term. But if you look below, cycle 1 is negative, cycle 2 is negative, so that's our momentum, and that's given us the indication that the probable direction is down. So it makes it easier to spot that trend and take the trend to the downside. So you can see right here where that orange arrow is, 513 cross there, and look how it really hit to the downside. Now here's that 513 cross back to the upside in June, and you can see momentum is shifted up, so this tells us probable direction is to the upside. So combining these types of tools together creates a really dynamic way to trade, and a great way to navigate these really crazy markets that we're in. Now the other way I like to use this kind of indicator is, again, going back to the monthly and looking at the bigger macro picture. So here's the US dollar index. So, in the markets, you want to follow the dollar. When the dollar goes lower, that's typically good for commodities because they're priced in dollars. So it can create a big, huge trend, on commodities such as gold going up, or copper, things like that, or even crude oil. So you can see here the monthly trend shift here for the dollar came back. The dollar started going down based on the 513 cross was June of 2020, and see that massive sell-off on the dollar. And then you can see here it had a kind of a brief move to the upside, 513 cross here back in 2018, and then here you had another big huge moving average cross back in May of 2017. So this can really be a great indication of different sectors to maybe focus in on, such as maybe gold or even crude. So let's take a look at gold. So here's an example of kind of that combination of momentum chart on the right with just your pure 513 cross. So here it is on the weekly again, both charts. So here's the 513 cross showing you right here came on March 2020 right here. Now when you look over to this chart though, you'll see momentum is up, cycle 1 and 2. So that gives us probable direction to the upside, which turned out to be a really great, powerful move on gold up to that point. Now then you start seeing it kind of chopping back and forth, and this is the other way that momentum can help stay out of the kind of these choppy periods. So basically here, when we started getting the 513 cross down, 513 cross up, down, you can see momentum on both cycle 1 and 2 are negative. So as long as they stay negative here, you do nothing. You don't want to be looking to take a long or whatever. You want to wait for the break. And then we finally got it right here. So just a lot of ways to use these tools, but I find it super helpful, especially from a big, huge macro point of view, to kind of spot the trend and kind of know how to then take action, navigate the market. So hopefully this was some information you can use in your trading. And if you'd like to learn more about power cycle trading and all the different things we do, directional trading, option trading, make sure to visit us at powercycletrading.com. So one last time, make sure to come visit us, powercycletrading.com. We have all kinds of free information, trading software, courses, etc. So hope you enjoyed this video, and good luck trading.